Hello guys, my name is John Munga and today we are going to be talking matters investing.
Right, that's our forte here in Quenching Your Thirst with Willis Nyakundi. We will appreciate your subscription and sharing of this video. Thanks and enjoy the rest of the video.
So, if you're a beginner, this is your first time learning about investments. You are asking yourself, how do I go about it? Well, rest assured, I'm here today to give you the right information. I am going to tell you the steps you need to take when you are investing. And we are going to narrow it down to 4 major investments vehicles. Number 1, the money market fund. Number 2, the treasury bills. Number 3, the treasury bonds. And number 4, which is the last one, stocks. Some people call it shares, but it's the same thing. Now let's begin with the money market fund. These are pooled investments. These are investments that are money that is pulled together and invested in short-term, low-risk securities. Think of this as a safer way to earn interest in your money. To invest in a money market fund, follow these steps. Number 1, choose a perfect fund manager for you. Go wherever you will, whether it's in the internet, whether it's through friends or recommendations, but make sure you find a good fund manager. This is where you select and look for a licensed fund manager. Some of the most popular fund managers are banks, financial institutions, and so on and so forth. Make sure you search for one that is licensed and you are good to go. Number 2, open an account with those fund managers. So you've gone and looked for a bank that offers money market fund. After you identify that fund manager or that institution, you open an account, a money market account. Step number 3, start funding your account. I hear some even go as low as 100 shillings. It is you to look for a fund manager that suits your needs. The money market fund investment is one of the best investments out there because it offers liquidity, meaning you can get your money very quick and very easily. Let's go to the next investment, and this is the treasury bill. So treasury bills are short-term government securities. They mature in 1 year or less. These investments are considered safe investment. So if you are there and wondering, how sure am I if my money will be lost? Well, be rest assured, when you're looking for a safe investment, then the treasury bills are your bet. To invest in a treasury bill, number 1, you will need to go and open an account. So you have to have an account with either a bank or a broker, because now where will your money be put? Number 2, you go to the CBK, Central Bank of Kenya website, and look for upcoming treasury bills auctions. After you look for the upcoming auction and you find it, the next step is placing your bid. Remember, not only you are bidding for that auction. Majority of the people are, or people who are interested in investing in the treasury bills. So you place your bid. The minimum amount of money you can bid on treasury bills is 100,000 Kenya shillings. When placing your bid, you indicate the amount of money you want to bid with and also the interest rate that you want. The last step, which I don't think you even need to do anything, is you wait for the auction result. This is where you're going to be sent your results and whether you are successful or not. If you are successful, then you can have or keep your treasury bills and wait up to maturity where you will be able to earn your interest. That's how you invest in a treasury bill. Keep in mind that these are low-risk investments. These are safe investments. Moving on to treasury bonds. The steps to invest in treasury bonds are the same like treasury bills. You open an investment account, go to the CBK and look for upcoming auctions of treasury bonds. Place your bid. After you place your bill, of course indicating the amount you want to bid with and the interest rate, you wait for confirmation whether your bid was successful or not. And if it was successful, you hold that bond for the period of year that you have bid on until it matures and you are paid your interest. The minimum amount you can invest with is 50,000 Kenya shillings. That's a bit less than treasury bills, but you have to wait longer. Another thing with treasury bonds is they pay you your interest semi-annual, twice a year. Half of your money will be given in the first 6 months and then the rest in the last 6 months. Investing in the Nairobi Securities Exchange offers higher returns. However, this is one of the highest risk or high risk investments there are. With high return comes high risk. Now, how do you go about investing in the stock market in the Nairobi Securities? Number one, choose a stock broker. This is a licensed stock broker. After you've discovered that stock broker, open a CDS account. The Central Depository System account will hold your share electronically. It's like a bank for shares, not for money, but a bank for shares. So when you buy shares, they're deposited there. When you sell shares, they're removed there and so sent to another person's depository account, CDS account. Step number 3, deposit funds in account. This is where you fund your account, the CDS account, so that you can have money to buy shares. And you can do this via 2 ways. Number one, you can do it yourself, or you can hire those brokers to buy shares for you. Whichever one works for you, the better. You can start with a small amount, go on and grow up to where you're going to deposit or fund with a large amount of money. Remember, this is a high risk investment, so don't be risky with your hard-earned money. Don't forget to check the minimum purchase requirement. After you have funded your account, last but not least, start trading. Go and research. Look for shares that are performing well. Look for companies that are performing well. Look at how people are viewing this company. Look at how they are performing. If they are performing well, go ahead and buy the shares and look at the trend. How are they performing the last 5 years? That will tell you how they will perform in the coming years. Investing in stocks can be thrilling, but it can be very risky. Make sure you know what you're doing when you're investing in the stock market. Oh, and don't forget, this is a very important part or piece of information. Diversify your portfolio so that when one ship sinks, another one can keep you afloat. As the saying goes, don't keep all your eggs in one basket. So there you go, guys. All you need to know about investing in money market funds, treasury bills, treasury bonds, and stocks. Don't forget, or just remember, when you're investing, do your research so that you can make the right decision. If you found this video helpful, give us a thumbs up and subscribe to this video so that you can continue getting more exciting and informative information. Have a nice day and good luck to you in your investment journey.
There you go. We believe you have been informed on investment tips you may use to boost your financial maneuvers. Keep it here for new financial tips videos and don't forget to comment and subscribe. Cheers!